Welcome to The Driven Deal, the podcast where real estate professionals, investors, and industry experts share insights, strategies, and trends shaping the market. I'm your host, Jose Angel, and in each episode, we dive into game-changing tactics, automation, and success stories to help you stay ahead in the real estate world. Whether you're an agent, broker, or investor, this podcast is designed to bring you valuable knowledge to scale your business. Let's get started. On today's episode of The Driven Deal, we're excited to welcome Jake Clopton, the CEO of Clopton Capital. As a leading expert in commercial real estate financing and capital markets, Jake has built Clopton Capital into a go-to firm for investors, developers, and business owners seeking customized financing solutions. With deep expertise in debt and equity structuring, bridge loans, and long-term financing, he has helped countless clients scale their portfolios and optimize their real estate investments. Jake's insights into capital markets, lending strategies, and structuring successful real estate deals make him the perfect guest to discuss how investors can secure financing, navigate today's lending environment, and grow their real estate business strategically. Get ready for an in-depth conversation with a top real estate finance expert. It's great to meet you. Great to have you here. Thanks for making the time again, Jake. Can you share a bit about your role and how it fits in the bigger picture at Clopton Capital?
My role and how it fits in the bigger picture. Okay, well, I started this company 17 years ago. So I guess I'm the top role. When I originally started this company, I didn't actually have a background in commercial real estate finance and real estate in general. I had actually been coming from a background in interbank hedging product futures. So what I had done before is traded 3-month LIBOR futures and Fed funds and stuff like that. And that's really got my interest rate and banking background. The time period in which I started this company was 2008-9, right? So you can see how, the credit aspect of it kind of came into play with my decision to start an intermediary where I was helping people find credit and lending. And that's how we started, right? Originally, it wasn't just commercial real estate. I was really, we were looking at kind of like any sort of business lending and credit aspects and stuff like that. But it very quickly turned into, really a focus on commercial real estate financing.
Nice. And I bet it was hard starting out in the midst of the crisis that was going on in the United States in that period. Right?
Yeah, it was difficult, but easier in a way that I'll explain. During crises, right, like the barriers to entry tend to come down and people are much more willing to talk to people that they hadn't. And it's, much easier to network. Everybody's kind of scrambling and they don't really know what to do. And there's a lot of uncertainty. And a lot of incumbent players that are in industries during crises, leave, just for one reason or another. So it was actually a fantastic entry point into the industry and to really get much faster and easier footing than I think we would have if I had just gotten involved, at the top of a cycle. And generally speaking, I've said this a lot of time, I think, during difficult times is the best time to get started in anything.
Yeah. It's spotting the opportunities, right?
Right, exactly.
And right now, what does a typical day look like for you?
A typical day in the life is usually getting up a little bit before 6. I get my kids up and ready to go to school. I also have 3 kids on top of everything. Get them to school as soon as possible. Try to get some sort of, workout done after I drop them off. I usually end up taking a couple of calls at, 8:15 in the morning when I'm in the middle of trying to get that done. Get to the office, and then recently I've had booked meeting calls every 30 minutes all day long from about 8:30 or 9 in the morning till about 5 o'clock at night. And this is all commercial real estate, debt and equity arrangements for deals that are all over the country. And then, it's nighttime, that whole after school, after work activities, and then it starts all over again the next day, man.
I know what you mean. I have 2 kids on my own, so our mornings are very hectic here as well. And I mean, I have to start a lot earlier, before 6, the same as you, because if not, I don't get any quiet time to myself, Once they're up, and you gotta get the whole house moving,
What's quiet time? Yeah, I know. I understand. Yeah. Also a big believer in decompressing and, having, time to yourself, just to process all of the thoughts. That for me tends to be a lot of like when also combined with working out and getting that done. I run a lot too, so I'll run for about an hour and I have a lot of time to decompress and think while that's going on. So
Yeah.
that's definitely important. I agree.
So any major shifts that you're seeing in the industry right now, Jake?
Yes, I think there's been a lot going on in the industry, and a lot of it has to do with, the cost of capital going up significantly. Um, because of that, real estate's just a math problem, right? And the cost of capital being one of the variables of that problem. When one of these variables changes in such a quick way that it did, it takes time for the other parts of the equation to catch up. And the other parts of the equation being either the income of the properties or the sale price, right? One of those, something else has to adjust to make up for the change in the other one. So we saw a lot of the past couple of years was a lot of stagnation, because let's just say, the underlying economics of a lot of properties have not had time to catch up with the increased cost of capital. So the only thing that could really change would either bring a lot more equity to the table, which that's difficult, or lower the sales price. And what we really weren't seeing was a lot of sellers willing to take, lower prices for properties that they knew over the next couple of years, or if the cost of capital comes back down, they were going to miss out. So there has been, a little bit of difficulty making that math problem work for a lot of acquisitions. The other side of that is there's been a huge change up in, on the lending side, not just for, different rates, right? But different lending sources that, people are able and or willing to use. And it's really a lot coming from liquidity and banks' balance sheets. I'm sure everybody remembers there was the whole regional banking crisis, last year. That hasn't really changed. A lot of banks are still kind of dry on liquidity. And a lot of times when, we go to arrange a loan at a bank, they may actually ask our borrowers for deposits, right, to lend them money. So the bank's asking you for money to lend you money, which is counterintuitive, you would think. So we have seen, a little bit of tighter credit box in depository lending. And because of that, a lot of the private market, private debt funds and private lenders kind of, come in to fill that gap. But that has its own challenges, because that money is more expensive than, your conventional bank lending, and it makes those math problems a little bit more difficult. So, there is, in a way, there's a lot of the same, but in another way, there are a lot of, there has been a lot of change in the industry, really because of just all of this like change in the cost of capital, and it's what it's coming from.
All right. Yeah, I completely understand. I mean, it's difficult to get, well, I've spoken to a couple of real estate agents right now, and the common trend that I'm seeing is that it's getting a little bit more difficult to get people to sell their property, because these people, they already had locked in previous interest rates. So it doesn't make entirely sense right now, when you have a higher interest rate, to go and sell your property when you have to buy a new property with higher interest rates. So I guess it all makes sense, and it all comes down to making the math work and getting creative for it to work, right?
Right, exactly. So I mean, think about it. I mean, that's when yeah, I'm guessing the person you're talking to is like a residential type of realtor, right? And think about it from a homeowner's perspective. If they're going to move, and let's say they locked in their interest rate during COVID, like I did, and it's 2.5%. Why would I ever move? You know what I mean? Like, if I move, I'm just not only is just the move itself expensive and the transaction cost, but the amount of additional payments I'm going to have to make for the same amount of money is just prohibitively expensive. So effectively, like anybody that moves today, you're probably in a situation when you're probably, where you're probably downsizing just to maintain the same quality of life and cost of living that you did before for probably a bigger asset.
Yeah, complicated. Well, gotta make it work. Right now, there's a hot topic in the United States, which is AI. Has it impacted your business or your growth strategy?
AI is definitely interesting. I've put a lot of attention towards AI. I don't look at it as a competitor or something like that. It's just another tool in a toolbox. It's a very good tool, but it's not a replacement for everything. And I don't think it ever actually really will be, a full replacement. But running this company for 17 years. We've done it very efficiently and leanly because leveraged efficiency tools. And AI is just another, round of efficiency tools that has come out that, allows us to lower our bottom line. I don't necessarily look at AI as, oh my God, I'm going to, get some AI program and just start making so much money off of it. The way that, we've always approached efficiency tools is here's something that's going to allow me to leverage my own time even further to either reduce my own costs or to expand the reach of what I can do in reaching more clients. So I don't think it's a replacement, but I think it's a fantastic tool that's allowing people to do much more with less amount of time in a cheaper way.
And definitely. I'm there with you. So you've been in this business for 17 years. Right now, what has been working well for you and what has been kind of frustrating?
What's working well? Do you mean like what type of deals are getting through that we're getting done?
Or in the back office, like administrative processes, or what has been working well that has helped you get more clients, and what has been actually frustrating in the business?
I think, what works best for us is focus, right? And also figuring out what we have and finding deals to fit what we know we have. As an example, I think when I first started this business, I used to just go out and find, any deal, right? You're looking for, capital for XYZ. Let me go find it for you. The hypothesis around it has changed a little bit, whereas like what I'm doing is finding competitive buckets of capital and what they're earmarked for. For instance, we found, a fund that specifically is targeting office value add properties. I thought that was quite unique, because most people are shying away from office and really, not willing to look at it all. We find a bucket of capital that's, designed around office deals. So what we do is we take the credit box for that, and then go out to the market and say, hey, here's what we have. We have this capital ready for these deals. Come to us if you have them. And so it's a little bit of fishing with the right bait as opposed to going out and finding the fish and then trying to figure out what kind of bait it is, right? So that being much more targeted and thoughtful in that process has definitely helped a lot. So that's our process on the back end office side, but really taking advantage again of the AI stuff and as many efficiency tools as we can in technology, not changing who we are and what we do, but trying to incorporate that into kind of like the day-to-day operation and how that can make us more efficient is definitely helping.
I like that what you said, fishing with the right bait. It all comes down to that.
Exactly, right.
And right now, as far as your KPIs, which metrics are you most focused on improving?
For our KPIs, we don't really use a KPI metric. It's hard. Do you mean like our hit rate with our clientele and the loans we close? Yeah, it's a little different in commercial because the sales cycle is so long, right? Whereas in residential and or like, other like short-term credit lending, you can very, very quickly, translate like a lead to a closed deal or revenue. Commercial real estate is much more of a relationship business and staying in touch with people and really candidly being in touch with them and in front of them at the right time. So what I see as, let's say like the way that I don't know, like a residential mortgage lender may look at, I got a lead and I closed a deal. I see that same success as I made a new relationship and I'm now in touch with this person and we're going to be in touch going forward. Because some of the people that I've been in touch with, I have relationships with, I talked to for 10 years before they had a deal, before I closed something with them. And I've been around for that long to the point where like that actually has legitimately happened, right? So it's really hard. People ask me this before, like, oh, what's your sales cycle? I have no idea. The way to approach this business is to build your network, to build your relationships, and then those deals come. I may talk to somebody one day, the first time I talk to them and they've got something for me, or it might take a decade. So that's an interesting concept. And I push it much more to, it's not a lead gen cycle in commercial real estate. It's a network and relationship building business. And that's really what, I think makes you successful on this side of, the coin as opposed to like residential places like that.
And that was going to be my next question. I mean, what tactics have you been using to getting people through the door? What has worked and what do you think hasn't worked that well? You just answered it. I mean, it's building up a network, but how are you staying like on top of mind? I know it could take approximately upwards to 10 years to close a potential deal with somebody, but how do you keep that? How do you, I mean, again, how do you stay on top of mind with that individual?
Yeah, I mean, various different ways. We make sure we do email marketing. I try to stay out there in the industry as much as possible, doing expert guest news spots and podcasts and write articles. And, we make sure we follow up with them every so often with a phone call. I mean, it's really, it's, it's as simple as just staying in touch over time and making sure that this contact that we made just doesn't disappear, right? So, I mean, to a degree, it's kind of, marketing and kind of soft marketing too, like in contact database. And then also like a lot of just, guest expert, commentary and news and video, stuff like that. But I think, commercial real estate is also kind of a small industry where a lot of people really know each other. And at a certain point, if you're making enough noise and you're out there and you're getting to know enough people, your name kind of gets passed around a lot. So I get a lot of referrals, or I'll have people at conferences and say like, "Hey, man, I was over at a conference talking to this guy. Your name came up." Yada yada. So it's any way possible that you can keep your name out there and stay in front of people. Is it's just an ongoing, constant effort.
I bet. And in regards to that, how is the competition? How are you keeping yourself competitive?
So my theory on competition is and stuff like that is I'm not really worried about it. Right? I'm not like, man, I got to go research my competitors and figure out what they're doing and this and that. Commercial real estate's not rocket science. We have phenomenal resources that built up over almost 2 decades, but I really just try to non-commoditize ourselves as much as possible and have people that want to work with us. So, we have good relationships, try to differentiate ourselves as much as possible. And really just maintaining those good relationships is really what I think does it. We also have a lot of like value add things that we try to add to our clientele. So like, for instance, not only do we do financing, but we started several other verticals as additional add-on services. So we're also an insurance agency, a 1031 UI. We do commercial solar. We're trying to bring on like the property sales side. So, really trying to, add as much value into different parts of this, kind of like real estate cycle that people go through as much as possible.
Nice. All right. And any bottlenecks that are you seeing that when unlocked will take you to that next level in the business?
Bottlenecks. Right now, the biggest bottleneck I have is trying to, just because I'm kind of in the development process, finding the right people and getting the property sales side up and running. So that's my bottleneck at the moment. But, we'll figure that out if we figured out the other, side as well. It's really more or less about just finding the right people that you can know and trust to kind of bring into the ecosystem.
Nice. Any big plans for 2025? Where do you see yourself now from in the next 6 months or the next 12 months?
The idea is to just get as many deals done over the next 12 months as possible and continue to find those unique and competitive buckets of capital and bring those to our clientele. That I think is, the biggest thing we can do is, and that we do as a value add, is finding those unique, efficient, cost-effective buckets of capital that will let our clients make money with deals in ways that they didn't think they could or didn't know how to do before.
That's nice. And if you could solve one major challenge today, what would it be, Jake?
The biggest issue I see is people having trouble finding equity. Like LP equity investors think that is something that is a huge need in the industry. I don't exactly know where the bottleneck is on that side. But if there was a challenge that I see most of my clientele and other real estate operators have, it's an efficient and consistent, effective way to find LP equity investors for themselves.
Well, thank you again. That was great, Jake. Where can people reach out to you if they want to get in contact with you?
I'm extremely easy to get in touch with. You can go through our website, Clopton Capital, call me directly, LinkedIn. I'm exceptionally easy to find.
All right, then. Well, thank you and great to have you here.
Awesome. I appreciate it.
All right. Have a good one, Jake. Take care.
Thank you. You as well.
Bye.
Take care. Bye bye.